On Friday, we see the S&P 500 basically forming an inside candle. And right here, we see why that is. The Dow drops more than 100 points Friday as investors await U.S.-China trade talks. So what is going to happen after the trade talk stops? And let's not forget, we have a very important news announcement this week. So Sunday night when the futures markets open, it should be action-packed. Question is, which way is the market going to gap? Is it going to be a gap up, or are we going to see the futures gapping lower? If we come over real quick, we look at Bitcoin. Bitcoin has been on the move up higher. However, recently we see Bitcoin starting to dip lower. Bitcoin right now is down $1,000. However, look at the high over here on Saturday. We've seen Bitcoin make it to as high of $104,983. Look at the poly markets. First Saturday, we see now the market is priced in. There's a 60% chance US-China trade deal before June. Keep in mind, that's only about 3 weeks away. However, we need to be well aware of news articles like this or X posts or whatever the case may be. But this post right here says China's vice premier basically walks out midway through the U.S. trade talks. However, if we look at an article like this, Trump hails China talks, says two sides negotiated total reset in Geneva. So as we see signs like this, is this Trump just basically over-exaggerating how well things actually did? Great progress made meeting with China on Saturday. Now, keep in mind, the meetings are going to go ahead and continue into Sunday. Will we get any type of confirmation that deals are about to be made or that both sides are getting ready to walk away from the table? Now, let's not forget also, looking at the SPY real quick, it wasn't that long ago when we got the 9 count. The 9 count actually completed out here Monday, May 5th. So this past Monday, we got a 9 count. What the 9 count signifies is we have exhaustion in the market. That's usually resolved by the market either going sideways or we start to get a pullback. As we start to get a pullback earlier on in the week, notice we never made it all the way down, filling the gap. At one point, it looked like we're about to make it towards a gap. However, the market said, not so quick. So will this consolidation that's starting to form be able to break up or be able to break down? We look at other geopolitical events. India and Pakistan agreed to ceasefires, but will it hold? Here's what you need to know. Well, we don't have to look much longer than that because the next article right here, explosions reported after India and Pakistan agreed to cease fire. So again, right now it doesn't look like it's holding up, or did everybody not get the memo that there is a ceasefire? So there is a potential. This could also be a positive catalyst for the market, or if this ends up escalating further, that could be a negative catalyst out here. Now, talking about other negative catalysts out there, let's talk about the Russia-Ukraine war that's been going on for way too long. Now, this article says Ukraine-Russia war latest, Putin proposes direct talks with Kyiv after Trump and Europe ceasefire ultimatum. So, maybe we're going to finally start to see an end to all this madness over there between Russia and Ukraine. I'd love to see nothing more than that to go ahead and go away. Then we come over and look at the most recent investor sentiment survey. This week, we got back over into greedy territory and closed it out on Friday. We closed at 62, well within the greed category. Now, if we go over and we look at the timeline real quick, notice this is the highest reading that we have seen in the market going all the way back to December 2nd. And you can see it's just been vertical on the way up. Now, if we come over and look at the most recent investor sentiment survey brought to us this week, even with all the bullishness, all that we've seen in the market, notice the bulls are only at 29.4. If we look at the historical average right down here for the bullish reading, it's 37.5. There's 51.5% of participants believe the market will be lower in 6 months, and basically 19% are undecided. So who do we think has it right? Is it the bears on the survey or the bulls? Let me know what you guys think in the comment section down below. Now, right now, I want to remind you guys of 3 amazing prop firm deals. Apex Trader Funding, 80% off all their valuation accounts. My Funded Futures, new clients, you can get 50% off any prop firm evaluation. And Take Profit Trader, 30% off all evaluations, no activation fee with daily payouts once you're over the buffer. If you want to take advantage of these offers, use the links in the description box down below, as it's a way to ensure you get the best deal and help support the channel. Now, as we look at all the indices on Friday, all the indices were in the red, but the NASDAQ was up roughly 78 cents. We look at advancing issues versus declining. We had more issues advancing on the day. Then as we come over and look at the sectors, energy was by far outpacing everything else to the upside. Then if we look at the 1 week performance, notice healthcare by far outpacing everything else to the downside. We look at the big winner out there. The big winner was basically industrials, followed by consumer cyclicals. Both of those up right around 1%. So as we come over and look at crude oil, so far, crude oil is defending this zone right down here. Drew the zone out by looking at the candle bodies down here to the candle wick of the low that we seen out here in April. Now we're still on the alert. Will this produce another lower high in the market? We have a high, lower high, potentially lower high once again, or are we going to come up towards this minus development area, maybe do a little double top? And if so, that could either turn into some type of lower level consolidation, or maybe we're getting ready to break up and out. Now with crude oil going down, let's not forget on Tuesday, we have one of the biggest news events of the week, and that is going to be the CPI or CPI, however we want to call it. Now, if we look at the previous CPI report, notice it showed that the CPI was actually a negative print of negative 0.1. However, I do want to bring to your attention, like I always do, in the CPI report, they let us know ahead of time, sampling error in the CPI report. The CPI is a statistical estimate that is subject to sampling error because it is based upon a sample of retail prices and not the complete universe of all prices. So regardless what the number is come out here on Tuesday, is it going to be a sampling error, or is it going to be the true CPI number? Now, if we look at the last CPI report, I want to draw your attention to what was really helping the number be a lot lower. If we look right over here at energy, we can see energy commodities was a negative 6.1, energy as a whole minus 2.4, fuel oil minus 4.2, gasoline of all types negative 6.3. And if we go back and refer back to that crude oil chart, crude oil has still basically been lower for the most part. Yes, it's been trying to come up this last week or so, but from the month of April, notice here's the first day of April. From April all the way until May 1st, we can see crude oil was going down again. So is that going to actually help out the CPI report once again this week? Now, I want to make sure I keep an eye on the 2-year versus the 10-year yield curve. If we start to see the yield curve steepening once again, that is normally where the stock market starts having problems. Then we look at the Dow Jones versus the transportation index. The chart on the bottom is the transportation index. And notice it basically called the double top right up here, showing us huge divergence, and it basically fell off a cliff. As the Dow has been rallying on the way up, notice now the transportation index actually started to come down a little bit this week as we basically had an up doji candle out here on the transportation index. Next, we jump over and look at the SPY versus high yield bonds, HYG. High yield bonds trying to go up here just a little bit, even with the down candle that we saw on Friday. Now, keep in mind, Thursday was a doji candle. Friday was nothing more than an inside day. So as we come over and we look at the SPY on the weekly chart, notice this past week, we closed with a doji candle. Yes, we broke the high of last week. We were not able to close above it. We came nowhere near the lower end of that range. MACD indicator on the weekly chart is trying to get across up, but for all intents and purposes, we're just building out this high volume area somewhere in the ballpark of 561. If we do flush lower, the next high volume area is going to be about 544.48. Then we jump over and start looking at the daily chart. Thursday, we had that doji candle. Friday, we produced an inside day. So is Monday going to be a breakout or breakdown from this pattern? Whenever we have an inside day, that is likely going to be the outcome after that. And if we're going to break, is it just going to go back down towards the lower part of this upper consolidation, or will we make it all the way down, filling in some of these gaps? On the 4-hour chart, we just barely got a bearish cross of the MACD indicator. And if this is going to be a double top pattern, top number one, top number two, that price completion is down here about 543.26. That would be enough to at least fill the first gap. But keep in mind, as we look left, we still have multiple gaps lower. Then on the 30-minute chart, then notice on Friday, we form a B as in boy shaped profile. Now with the B shaped profile, what that signifies is if we break above value area high, we're likely going to explore the upper third of the range, which would be about 566.84. Something else I want to remind you guys of, whenever we get an inside candle or a D as in dog shaped profile, we want to be on high alert for a potential trap, which means the first way we break could be nothing more than the market setting a trap. On Thursday, we had that gap up. We did not fill the gap on Thursday. And we scroll back, we can see some other gaps like the gap right over here at 554.36. We scroll back even more. We have that other gap down here about 527.13 and another gap all the way down here at 513.87. Now with the B as in boy shape profile, we did get the move down. We had that lower level consolidation. Now it's all going to be all eyes on what is China and US trade negotiations basically going to be able to materialize as. Is it going to be positive where the market sees it positive? Or could it be positive and the market just simply sells the news? It was a case of buy the rumor, sell the news. If we start breaking below value area low, watch out for the lows of Friday to be retested. And then anything below that, I want to hold out for some of those lower gaps to potentially come back and get filled. As we come over and look at the futures markets, I'm going to classify the weekly volume profile as a D as in dog, but we do have a minus development area within that D-shaped profile. Now we can also maybe classify this as a B as in boy, but if we look at the range, we only had a 145 point range for the whole entire week. That is one of the smallest ranges we've seen, and that's another reason why I want to classify this as a D as in dog. Now, one of the areas I do want to watch for is, do we come back and try to fill in this minus development area at about 56.57? Keep in mind, last week, especially if you guys joined me on the live stream, and speaking of live streams, if you don't want to miss the next time I go live, make sure you're subscribed. You have the bell notifications turned on for all. Monday, we're going to be announcing the winner of the 50K Take Profit Trader account. But what we're talking about on stream was the first time we come into this minus development area, expect the market to bounce out. That's what we did. The second time we bounce out again. Now, usually it's the second, third, or fourth time we come into that area, then we're likely going to go ahead and flush down. Keep in mind some areas that we would want to focus on would be the high volume node about 55.89, then this untested point of control from the week before at 55.49.5. However, if the China trade talks produce a positive outlook for the market, we're likely going to break out. And then the question will be, will it hold? Is it going to be a basically look above and a potential failure to work into some type of consolidation and backfill in some of these areas just a bit? Now, if we look at the weekly value area high, that's going to come in at 57.06. The weekly point of control will be 56.78 and value area low will be down here at 56.38. So if you're looking for the market to go down, what I would love to see, can we break value area high and then come back down? Because then I can target the point of control. Then I can target value area low. Then I can turn my attentions over towards that high volume node and then the untested point of control. Now, if the market's already going down come Monday and then that CPI report comes out very bearish as well, we can see stocks going substantially lower. However, with crude oil already going down, I just don't know that I believe the CPI report is going to be all that negative. Now, as we come over and start looking at the profiles out here from Friday, notice on Thursday, we did leave behind a point of control up here at 57.26 This is an untested point of control. Then on Friday, you can see we closed above the point of control as well. So that's going to be two back-to-back untested point of controls, meaning consecutive untested point of controls. However, with the untested point of controls, I prefer to see them both in the same location. What I mean by this is the one on Thursday was above us. I would prefer to see the one on Friday above us as well, as that would then increase the probabilities of at least one of those point of controls being tested. I'm going to classify the shape of the profile on Friday as a B as in boy. If you look at value area high, that comes in at 56.90.00. Point of control will be 56.78. Value area low will be 56.72.00. Now, if we can break value area high, then I want to target right up here towards the candle bodies out here on Friday, somewhere about 57.05. And if we break that, then I want to turn my attention all the way back up here towards that point of control. However, if we break above value area high and then we simply come right back down, then I want to target the point of control. I want to target value area low, and then anything below that, I want to turn my attentions back towards the lows on Thursday, and then anything below that, come back over here to the weekly profiles and refer over to all the weekly targets that we had in place that we spoke about moments ago. Now, let's not forget, we are still in the midst of earnings season out here. For instance, Wednesday after the close, we have Cisco coming out. If we look at the options market to see the expected big movers out there, Zoom Info expected to move plus or minus 14.5%. Jack in the Box on Wednesday expected to move plus or minus 11%. Then we come over and look at the economic calendar for next week. Really no major economic news on Monday. We do have some Fed heads speaking. Tuesday, we talked about the CPI report coming out at 8:30. On Wednesday, we have Waller speaking. And that's about it. Then on Thursday, we're going to get the PPI data coming out at 8:30. We get the Philly Fed Manufacturing Index, Empire State Manufacturing, and Papa Powell is going to be speaking before the market opens at 8:40 a.m. However, something we don't want to sleep on, and we talk about this quite often on the live stream, and that is going to be on Friday at 10 a.m. when we get the preliminary consumer sentiment and the preliminary inflation expectations. Quite often, this will produce a trend day on Friday. So we want to see, do we get a trend established after that news? And is that trend still intact after lunch? If so, watch out. The market's likely going to continue to push in whichever direction that trend is all the way into the close. Now, we come over and look at the QQQs real quick on the weekly chart. We are above the VWAP from all-time highs. We look at the candle and notice we have a wick on the bottom, a wick on the top, and this is kind of going to be a spinning top-ish type of candle. MACD trying to cross out here on the weekly chart, but also the wick on the bottom is a little bit larger than the wick on top. If we go ahead and we measure how far have we actually moved off the low, we can see from the high of last week, from the low, we've rallied up 22.47%. And if we pull a fib from all-time high down towards the low off the weekly, notice we are right there near the 61.8. So is this going to turn into a larger ABC pattern to the downside, or are we going to start pushing through the 61.8? If we can breach the 786, then I think we're going to make a run to all-time highs. As we come over and look at the daily chart real quick, both of anchored VWAPs, one from the low, one from all-time highs, we're above both. Thursday, we produced a doji candle similar to what we talked about on the SPY. Then on Friday, we did produce a little bit of a down candle. However, it ended up being an inside day. MACD indicator, the upper line is starting to roll just a bit, but it's in the very early stages. Now, is this going to turn into an upper level consolidation? Keep in mind, similar to with the S&P, we also had a 9 count out here, except for the 9 count. And the 9 count came in on Monday, and the 9 count basically signifies exhaustion in the market. That can resolve itself to the downside or basically going sideways out here. Come over and pull up the SMA. Notice what we did this past week. We hit the 200 period SMA, basically tested it. Are we going to start to get a rejection down from that area, or are we going to be able to flip back above that moving average? We look out here on the 4-hour chart, MACD indicator just barely crossed to the downside. We start to go down. Keep in mind of this minus development area of the profile right near the bottom. What could be this consolidation? That's going to be about 477.74. We also want to be mindful this could turn into a double top. Top number one, top number two. And if we go to measure out to see where that double top completion would be, that would bring us all the way down here to 461.15. However, keep in mind the double top pattern is not validated until we take out the swing point right down here, somewhere in the ballpark of 476.99. Now, as we dive down to the 30-minute chart, we see the MACD indicator is crossed to the downside, working its way down towards that zero line. Now, we do have a B as in boy shaped profile, but we kind of have a huge minus development area of this profile. I'm going to go ahead and draw this whole zone out, and I'm going to go ahead and say anywhere from 489.03 all the way up here to about 490.15. At some point, I do think we're likely to go back and test that. And the question is, do we come up into that area and then we reject right back down? Keep in mind, on Thursday, we had a gap that was not filled. We scroll on back. We have gaps all over the place. One down here at 475.29. We have more gaps. We have a gap over here at 454.45. We have another gap at 444.53 and another gap at 433.18. So the NASDAQ has done a very good job of basically gapping going and not really coming back and filling the gaps to the upside. Now, keep in mind, with the China trade talks underway, if that comes out bullish, we're likely going to gap all the way above not only the high on Friday, but probably the high on Thursday as well. And on the daily chart, that's probably going to go ahead and be enough to push us towards this ABC pattern off the low up here to about 493.39. Now, as we jump over and we start looking at the futures markets real quick, look over here on the 4-hour chart. I'm going to classify this as a D as in dog. Last week, we closed above value area high. We came right back down. We tested that area. We had 2 tests into this minus development area. So we started to build it out here a little bit. If we come back into it once again, highly probable we break that level. We come back towards that high volume node right here at about 19,651. Then we break that. We're looking at this untested point of control, 19,509. Now, if we look at last week's volume profile levels, 19,874.75 will be value area low. The point of control coming at 20,135 and a quarter, with value area high coming up here about 20,198.75. So keep in mind, with the volume profile rotation, we need to see a break outside of value and then the market return into value. Now it could be a break above value area high. We come back down, then I want to target the point of control, then value area low. Now we could also target kind of this minus development area within the profile as an additional target, 19,979. And let's say that maybe the talks don't come out that great on Sunday and we see the markets gapping lower, we go below value area low. Well, if we get back above it, then we could target that minus development area, point of control, value area high. Then the high is out here as well. But keep in mind, that same double top pattern that we talked about with the QQQs, we can have that double top pattern in play as well. Now on the NASDAQ, that would give us a price completion all the way down here at 19,006. However, just like we talked about with the Qs, in order to validate that pattern, we must break below where we had that double bottom pattern right there in order to validate that pattern. That doesn't mean we don't get involved in some type of short on a smaller time frame and we push our runners out towards some of these other targets, one of them being a much larger target, 19,006. Now, if we pull a fib from the low out here in mid-April up here towards these high, notice the 50% level comes in right where that double top target also comes into play. Is that a coincidence? I'm not sure. Only time will tell. Then as we come over and look at the daily profiles, I'm going to classify this as a B as in boy, similar to the S&P 500. Now we are closing right near that point of control at 20,140. Value area high will be 20,183. Value area low will be 20,085. Now, if we do break outside of value, either value area high or low, and we get back into value, I do want to use the point of control as the first target and then the other value area as an additional target. Now, if we just simply rip right off the open, we get above 20,183. I want to go ahead and target right up here on Friday near these candle body highs, 20,253. Anything above that, I want to turn my attention back over here near the highs on Thursday, and then anything above and beyond that, then we simply want to go ahead and scroll this out a bit and say, okay, where are we likely going? Probably up towards this high volume area on the composite profile. And we really start to get into that area about 20,548. Now, in the event that we break value area low and we do not start coming back up, I then would want to turn my attention down here towards the candle bodies around 1 o'clock on Thursday, 20,118. We breach below that. Then I want to refer back over here to the weekly profiles and all those targets that we talked about moments ago. Now, if we come over and look at the dollar index on Friday, dollar index slightly down. We see the MACD indicator is crossed to the upside. Are we going to be able to get a push up and out? Keep in mind, as we look at the volatility index, the VIX continues to go lower. The VIX was down once again on Friday. MACD indicator is below the zero line, but are we going to see the VIX into the teens this week? Let's also take a look at the precious metal gold. On Friday, gold had a little bit of a relief rally on the way up. Intraday, we did wick a little bit lower, but we closed in the upper third of the range. And keep in mind, this could actually be setting up an ABC pattern up, which would take us to all-time highs. We can grab our Fibonacci extension tool, measure A to B, B to C being the corrective leg, and notice that takes us just slightly above all-time highs. But keep in mind, in order for that pattern to be validated, we must take out the swing high right over here on May 7th at a price point of 3,448. We start breaking back below the low on Friday. Watch out for the market to come down, start retesting the lows at about 32.10, then maybe finally making its way towards filling the gap at 3,178. Now, if you'd like to see what I learned about my fund and futures last week during the live stream, make sure to watch this next video right here.